Welcome and thanks for joining us at EMII.com. I'm Kathleen Reddington with your Capital Markets Report. Today is Tuesday, July 29, 2008. According to Reuters, the Kohlberg-Kravis-Roberts plan to merge with a struggling affiliate and then list on the New York Stock Exchange will help the giant buyout firm expand at an ideal time for making acquisitions. KKR has announced plans to list on the New York Stock Exchange this year in a deal valued at $12 to $15 billion. They are one of the world's most powerful private equity firms. KKR is aiming to go public through a complicated transaction that involves buying KKR Private Equity Partners, which is publicly listed Amsterdam investment fund, delisting it from Amsterdam, and then relisting it in the new company in New York. The move comes amid a drought for the private equity industry's traditional business of leveraged buyouts. And staying with capital markets news, the International Financing Review is reporting that XM Satellite Radio plans to sell $550 million of 6-year non-callable exchangeable notes in the Rule 144A private placement market. The coupon rate is expected to be in range of 6% to 6.5%, with a conversion premium of 20 to 30%. The proceeds of the sale will be used to refinance XM Satellite debt ahead of its merger with Sirius Satellite Radio. The notes will be exchangeable into shares of Sirius common stock. And in more capital markets news, according to Thomson Merger News, the Royal Bank of Scotland has sold its 50% stake in Tesco Personal Finance to Tesco for £950 million. RBS expects to make a £500 million profit from the sale, while Britain's largest supermarket now aims to become a full-service retail bank. According to Tesco's CEO, Sir Terry Leahy, services are bigger and faster-growing markets than food. Leahy says financial services, telecoms, and internet home shopping could bring Tesco £1 billion in profits a year, more than double the current level of just under £400 million by pursuing such a strategy. And in other capital markets news, Bloomberg News is reporting that Just Group Limited said a revised $780 million Australian dollar bid from Premier Investments Limited is still too low. Just Group Limited is Australia's largest owner of clothing stores. Premier said it may raise the offer by 15 cents a share to $2.24 if it receives acceptances for 90% of the stock by August 6. Premier is controlled by billionaire Solomon Lew. Shareholders may also get a dividend worth 4.5 cents each just share. Earlier this month, it cut its 2008 profit forecast as much as 13% as record fuel costs, higher interest rates, and a New Zealand economy on the brink of a recession hurt sales and profit margins. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto our Capital Markets channel online, read the full stories and the latest developments.